Hi everyone, welcome to tonight's video lesson. I'm going to be analyzing two trades that I made today, August 28th, 2017. The first one is going to be IMMU, or IMMU. Look at this chart over the last week or so. It has been nothing but straight up. We've played this multiple times, played it on a break over 1050 for an awesome swing. We've done a lot of stuff with this because look at this channel. Why, I just can't help but stay away as long as it stays in this channel. Now, what did I see this morning? Why did I jump in at 11:01 and it ended up closing up at 11:91? Now, I didn't hold it from 11:01 to 11:91, but I want you guys to see what I saw so you guys can begin to analyze charts and make these trades yourself. So let's start off talking about this resistance level at $11. This is a multi-day resistance going back here at the beginning of last Friday. It tried to break out in the morning. It tried to go over 11. But it couldn't. It got denied, and I actually had a buy alert on this over 11 for last Friday. But it couldn't make it. It couldn't do it. Ended up trading down. Had the first red day in a long time. And to show you guys how great of a chart this is, let's back up. I'm going to go to the year. This is a year. Each one of these candlesticks represents one day. Look at this chart. It's just been nothing but up. The better a chart looks on multiple time frames, the better off you are and the better setup you're going to have. Let's go back to break this down, get a little bit closer here. This is where I played it right here. I got in at 11:01 right here. This is a little skewed, this box here. I actually got in here at 11:01 and I got out at 11:28 for plus 2.5% trade. 2.5% is nothing crazy. It's not going to make you rich overnight, but it is going to make you rich over days, weeks, months, and years. If you make trades like this that are A+ setups, 2.5%, imagine adding 2.5% to your portfolio every day. It doesn't take long until you're doubling your portfolio, tripling your portfolio. It's all about patience, locking in quick profits, taking advantage of A+ setups. So I locked this in here at 11:28, and I bought this on the break of $11 because, as I showed, this was proven resistance. It came down and it curled back up. It got hot this morning. I was watching this right out of the gate. I thought I might do it right here from the beginning, but I was actually happy when it pulled back a little bit and created a new base. If this were to go directly from 1040 all the way up through 11, it would have worried me a little bit because it would have began to look a little bit overextended and overbought at that point. This here is a nice healthy pullback to establish a higher level, a higher low than previously. What you want to see is higher lows, and that's what we get here. Low. Now it's higher, low. The next low's here, next low's here, next low's here, next low's here. That's the kind of stair stepping you want to see on these stocks when you're playing them. This was an A+ setup right as it broke over $11. I had a buy in at 11:01. Another important thing to see here is the volume. Some of the biggest volume of the day was right when it broke over the 11 mark. You can see it had candlesticks as much of 150,000 shares a minute, and that's a lot for a high-priced stock like this. So I was watching that volume. You can see it curl up right here. I'm actually going to zoom a little bit more because we'll be able to get a little bit better read there. You can see it curl up right as this is breaking over 11, and that's what I like to see. This is the kind of volume you want when you're trading this. This is the kind of volume you don't want. So anyways, we jumped in 11:01. I sold at 11:28. Yes, it continued to 11:91. Am I mad about that? Am I mad that I didn't hold longer? No, absolutely not. I'm ecstatic about my 2.5%, and we'll definitely keep this on watch again for tomorrow. The other stock I want to show you guys is CRMD. This is another stock we played. Look at this on the year-long chart. This is a beaten-up stock. It was at 248 months ago. Ended up hitting all the way down here at 32 cents. This is obviously not a great company, and it's really just in trouble as a stock, but it's a penny stock, and we try to trade momentum when it comes to penny stocks rather than fundamentals. It's important to realize. There's a huge drop off right here, and it created a gap, and this gap is important to pay attention in the future. It didn't have much to do with my trade today, but keep this in mind on the future. Keep CRMD in mind on a break over 70. It's in gap fill territory. I will definitely be buying this on a break over 70 in the future if that happens. Could be tomorrow, could be weeks down the road, who knows. Will be on my watch list, and I'll be ready for it when it does happen. Let's break it down a little bit further here. Why did I choose to buy over 52, which I did? I bought at just over 52, and I sold basically at 54. Now, why did I do that? What was I seeing? Let's look back here. I mean, we're looking at a ways back, and I'm going all the way back here to find resistance. This is back in May, this resistance that was coming in here. You can see it really had a struggle with this 52 level mark. And in case you didn't believe me, well, struggled with it again. Couldn't break and hold this 52 mark. Now, you could make this mistake thinking that the nearest resistance is the 50-cent level. And yes, that is true. That is the nearest resistance level. But it's important to look at a longer time frame sometimes. That's why I didn't buy on the break of 50. I bought on the 52 and over 52 instead because I felt it was a safer play. I don't like when resistance levels are stacked up like this. I would rather go over the high resistance level for more of an A+ setup. Rather, here over 50 was probably more of an A- setup. So now let's look at it on the 1-day chart. What was I seeing this morning and why did I buy it? Here it is. The most important thing to watch here is volume. Look at volume build right as this price begins to spike here. We're starting to get a lot of volume coming in here. And I was watching this. I watched this break over 50, which I just mentioned was the first level of resistance, but I didn't buy. I wanted to wait and see if it could hold it. I didn't want to get into a fake out. I waited as I saw volume was still pretty solid there. I ended up buying right in this area on the break over 52. Now was thinking about taking quick profits at the 53 level, but I decided to wait it out more because there's so much potential in the stock with how much it's sold off. So I waited. Not long after, it came under 52 cents, but I had a plan, so I didn't worry about it. I didn't freak out. It was always a trade with tight stop losses. My stop loss was under 50. Now you'll see it dipped here under 50 for just a split second. Well, I had a mental stop loss under 50, and I will often use those because there are times, had I had a stop loss at 0.499, someone could have come out here, wiped out my stop loss, taken my shares, only to ride all the way back up. Market makers can do that. Big shorts can do that. Sellers can do that. So you want to be careful. Oftentimes it could dip below a level of resistance to come back up. So that's what I did. I hung on to it through here. Had it have stayed, I would have gotten out, but it popped right back up, held the 50 cents line, which was very important, and that's what I wanted to see before it made its next step upwards. Got back over the 52 line, flirted with it a little bit, and right here we had some beautiful end of day action, and I sold right about here, just a couple minutes left, heading in to the close of market, up right near 54 cents, and it ended up being about a 3%, 3.5%, 4% trade for me, in from 52 out nearly at 54 level. So that's what I was seeing there with these two plays. I hope this helps. I hope these levels of resistance can help you. Remember to look at them on large time frames.